I'd like to introduce Novo, or Mike Novogratz. Will come and take a seat, and we're going to have a little chat. How close do you want me sitting?
Right next door.
Great. So, welcome everybody, and welcome Mike. I must admit, Mike has a great name. It sounds like you should be well known immediately. But I had not heard of your name until, critically, you had backed Pantera in its foundation and as one of the very earliest Bitcoin and blockchain-focused funds back in the beginning of 2013. And we have a mutual friend in Dr. Steve Waterhouse, also known as Seven these days. And running Orchid. So that was how we came across each other, or how I came across you. And I have seen that you've been involved in everything from helicopters to wrestling partners at Goldman Sachs to then diving into the Bitcoin world. So it seems like you're probably equipped for the Bitcoin world, but I'd love to get your thoughts on what was the thing that really enticed you into the space initially. And we've seen this morning in the various conversations, people talking about some of the even existential threats that we need to ward off as the technology becomes ever more interwoven in our lives, but also quite a positive and aspirational note about the potential, especially on that last panel, I thought. What drew you in?
All right, so big question. I originally got in, I was a macro speculator. I ran a macro hedge fund at a place called Fortress. And a friend of mine called, a partner of mine, and he said, "Have you heard about Bitcoin?" I said, "No," so I Googled it. And it took about literally 20 minutes to have the sense that this would go higher. Why? It was 2012, we were in the middle of the European financial crises. We were 4 years after the US financial crises. And at that point, some of the best investors in the world, Paul Singer from Elliott Advisors took a full-place ad in the Wall Street Journal saying that Ben Bernanke should go to jail because we're going to hyperinflate the value of currencies away. These were not far-out wackos saying this. This is, a lot of the mainstream of American finance was really worried about this quantitative easing experiment. And so I started digging in. I was like, wait, here's this new technology, which seems really cool. We've got libertarians and anarchists and people that want to be off the grid and people that think the world's going to fall apart, and cypherpunks all buying this stuff. And the Chinese had started buying. And so Bitcoin was about at $95, and I thought, this is a pretty good idea, let's buy some. And that was kind of it. Like most things in life, when you buy something and it goes up, it makes you feel smart. And then you start doing more research. And as I dug in, the thing really intrigued me. And so, quite frankly, I called Dan Muirhead, who was an ex-macro trader and a classmate of mine from college, and I said, "Have you ever looked at this stuff?" "No." I said, "Spend 2 weeks." And he spent 2 weeks, and he was like, "It's going to change the whole world." And so we backed Pantera and started making lots of investments in and around the ecosystem. But what really got me, actually, was a few years later. Bitcoin went up, it went back down, and then it had this kind of winter where it went sideways. And if you were a full-time investor, and luckily I wasn't at that point, it was a really long 18 months. For me, it was a long 18 months because my hedge fund was getting the crap beat out of it. And so I was more focused on my hedge fund than on Bitcoin. And when I left Fortress, no one ever leaves Wall Street gracefully. So you got broken glass on you and you're shaking it off. I looked at my portfolio and I remembered I had all these Bitcoins and I had all these investments and Bitstamp and Zappo and all these ecosystem companies. And so I went to visit another college roommate of mine, a guy named Joe Lubin, who had a tiny company called Consensus, which now has 900 people. But at that point, it was 30 people. I actually thought I was going to see a guy with 2 people and a dog. Joe had been a friend of mine forever, and he was always kind of living on the fringe. And so I went over there and was just wildly impressed that there were these, both young and old, from the 20-year-old coder who was at Stanford to the 37-year-old Morgan Stanley derivative salesman, in this warehouse in Brooklyn, and they were plotting out a revolution. They literally had whiteboards all over the place, and it was each vertical how they were going to disrupt. how they were going to change the music industry and connect consumers to artists directly and cut out the middleman, how they were going to decentralize cloud computing, how they were going to decentralize ride sharing. And it was at that moment I was like, this is much bigger than just a fad. This is a real revolution. And it's a culture revolution, right? The guys at the core of this, Joe Lubin, my roommate, they're really not in it for the money, right? This is a response to people having a kind of crises with trust. First in 2008, then in 2012. And you see it all around the world. The belief in central authority, right? Our Congress's approval rating in the US is at an all-time low. You know, we've got a president that just went to G7 and just changed the rules. And so, you know, the last panel they were talking about, well, in Sweden it's okay to have a chip in your arm, but like, heck, I wouldn't want it in Russia or China. The reality is, I mean, we're living this in the United States. Within a flash, your sense of trust in government can go from here to here. And so I think the existential threat when we talk about blockchain and why I'm involved and why it's almost a necessity is the other half of this conference is on AI. So the blockchain is like a third grader. AI is almost at a PhD level. And so it's growing so fast and getting so good and so smart. And if you marry that AI with these giant pools of data that we have, it's a scary dystopian future. You know, I don't know how many people did 23andMe. It's big in Europe, but it was a, you know, you licked a little thing and you sent it in, they gave you your DNA, and originally they told you you'd be more prone to be an alcoholic, and then they took that off and they said, well, we'll tell you where your ancestors were. We all thought that was kind of cool. Well, one of the Google founders' ex-wives ran it. She seemed like a very nice lady. And we all handed over, 5 million people have handed over their DNA to this nice lady. Let's hope she doesn't get hacked, because she's got all our DNA. Well, 10 years ago, it didn't matter that much. But all of a sudden now, with DNA, I was actually at a presentation 2 days ago, they can take your DNA of an embryo and predict how tall it's going to be within 1.5 inches. And 1.5 centimeters, I'm sorry. And so this idea that we've given our data to somebody that we have to trust, it seems insane. Right? My wife has got the bad chromosome for Alzheimer's, or bad gene for Alzheimer's, as my daughters. Like, that's terrible information for someone to have. Now you guys all know that as well. And so it feels like it's an essential, like the blockchain is the firewall between, you know, our privacy in some really strange future. Sorry it was such a long answer.
No, that's great, and I think it is a wonderful thing how these two elements, blockchain and AI, come together, and I think certainly we've been hearing that anything that empowers the individual and gives that sort of sovereign right over their data perhaps becomes an essential component of this next phase. But as you said, you know, blockchain perhaps arguably is still you know, in the toddler phase. And I couldn't agree with you more that, you know, what Joe Lubin has done with consensus and by thinking smartly about, you know, what needs to be built out and then directing quite a lot of capital that way is great. But with your sort of Galaxy hat on and thinking about what are going to be the killer apps that actually take off and generate investment returns, you know, for how long are we going to have to rely upon kind of recycling of crypto gains to fund this very essential new ecosystem?
Well, if I step back and kind of look at where we are, right? We had this retail-driven market mania last year. You know, classic signs of a speculative bubble. But what was unique, it was all retail-led. 98% of investing came from Mr. and Mrs. Watanabe or Mr. and Mrs. Smith. It didn't come from Fidelity or Goldman Sachs or the big pension funds. Right? It's the first like mini bubble we've seen that was retail-led, not institutional-led. That's really rare. It's why the regulators were so far behind. Right? Regulators come from institutions. Right? Our head of the SEC used to be a lawyer at Sullivan and Cromwell. their connections, their connectivity to the world comes from institutions. And so it's not a surprise that they were way behind on this space. And so end of last year, regulators said, wait a minute, we got to start doing something. There's way too much fraud and market manipulation around, got involved. And we kind of had a blow off top. At that point, maybe the total market cap of the whole crypto space was $1 trillion. $1 trillion is a lot of money. It's not enough to change the world. And so now, you know, fast forward 6 months, the market kind of crashed. It's going sideways. The market cap is probably $500 billion now, if you add up, maybe a little bit more. To put that in context, the internet bubble in just the United States in 1999, not 2018, got to $6 trillion. And so market manias go so much further than you ever think they're going to go. And so we're not in a bubble yet. We had a little mini pop. There was 96 in the internet. But now what you're going to see, and I see it every single day, are institutions creeping closer and closer to buying in. And it's not just buying for speculative. It's buying because they're investing in what they think is going to be, you know, a really cool story, right? Markets always get way ahead of reality. They just do. And unfortunately, to go back to your original question, we're not going to have blockchains fast enough, really, for big industrial scale use, you know, for a few years. And so the institutions aren't going to wait until I can take my decentralized Uber, right? So right now we're investing in stories. Pretty soon, you'll start seeing some data that you can start saying, wow, okay, their community is growing. Right? We invested in a company called Funfair. It's a British-based company that aims to decentralize online gambling. If the two of us got drunk and wanted to play blackjack, we would log in right now, probably to a casino based in the Bahamas, and they would cheat us, almost certainly. They might not cheat that much because we would go away, but we have no idea if they're being fair or not, unregulated in the Bahamas. And so he's like, okay, open source, I can put the odds right there for everyone to see. I can rebate some of the rake, you know, through token economic gig. A guy named Jez-san, you know, I think he's a knight.
I'm not sure he's a knight, but maybe a CBE or something.
He's got one of those 3 letters after him. But he's a real guy. He's a real CEO who's built real companies, who had real money, and I would bet he's gonna win in that space. What's interesting is only now, like 2 days ago, he dropped his testnet. So now you can start trying to gamble. And pretty soon we'll be able to say, well, how many people are gambling? And so the metrics of how we invest will change. Not right away, but over the next couple of years.
So if we think about it, and for the audience, there's this kind of split between apps where you might build decentralized apps that we have to kind of work out, is there going to be demand and will it scale? And then there are things on the more, should we say, the tokenization of existing securities or assets where you kind of already know there's some kind of demand for the asset, but you still need to check that it scales. So it seems to me I've seen a little bit of a shift even, that the emphasis is being put back onto the tokenization of existing assets and securities, because it takes out that question of, you know, whether or not there's going to be demand. Although I think, you know, gambling I think is probably there's a perennial demand for that. In light of that, I mean, I'm fond of saying that a lot of the perceived weaknesses of the crypto capital markets, that, you know, being custody, that being transparency, taxation, regulation, ultimately going to prove to be some of their greatest strengths. And I'm actually fond of saying that I think the crypto capital markets are kind of going to consume or surpass, or however you want to phrase it, today's capital markets. What are your thoughts on that?
Well, so break it into 3 pieces for a second, right? There are 100 different blockchains out there, all vying to be the same thing, the processor of data, the authenticator of databases. So if it's EOS, which just dropped, or Ethereum, or Hashgraph, or they're all trying, there's going to be some consolidation there. And then there, as you say, the apps on top of it, these decentralized communities, which to me, it's the most fascinating part of it. It's using tokens to create community. The third piece, securities tokens, I do think are going to be really important. A lot less exciting in some ways. It's not really revolutionary. It's In some ways it can be, but a lot of ways early on it's going to be just changing the way we own stocks or own equity in companies. One of the things I've learned visiting from Goldman Sachs to Deutsche Bank to Bank of New York last week, I get this privy position, everyone wants to talk, partly because I came from Wall Street, is that the giants aren't sleeping. They are moving fast. They haven't all pulled the trigger yet, but every major organization has a huge effort going around. How are they going to participate? And so there's no way, if the securities token market gets giant, Goldman Sachs and Merrill Lynch aren't going to be selling securities tokens. Smart companies morph. And so what we're trying to do at Galaxy is just get ahead of the curve. We're running as opposed to, usually I would say crawl, walk, run when you build a business. And I'm like, dudes, run. Because I think we've got like an 18-month window before the second-tier investment banks start raising capital, and then the first-tier investment banks start raising capital.
So can we try and put some, your team must have tried to put some numbers around that. I mean, people talk about this proverbial wall of institutional money coming into Bitcoin and other tokens. Yeah, so before and after.
Listen, we just did this index with Bloomberg, the Galaxy Bloomberg Crypto Index, which we think is an important piece of the architecture of the space. In 1962, the S&P 500 came out. In 73, the Lehman Ag came out. In 1992, I was at Goldman Sachs when the GS Commodities Index came out. And the GS Commodities Index really turned commodities from being a speculative asset class for punters to an institutionally accepted place for pensions to put money, right? Commodities is part of your portfolio. If you look at the charts of all three of those, commodities from 92 to 2008 went straight up. And so what we're kind of hoping is you give the market an index, give them something they can trust. We're not running the index, Bloomberg does. And it starts pulling people over. They're not going to come stampeding until custody is solved. Now, custody is really interesting because there are plenty of fine custody solutions out there. We custody our Bitcoin at Zoppo. I was a day one investor. I sleep like a baby knowing my Bitcoin is buried in some mountain somewhere with Letsis Casares. But I also know the state of Wisconsin or Hermes Pension, that guy is not going to risk his job for a company called BitGo or Zoppo, or they're going to feel much more comfortable with some institutional name custodying their keys. And so I think in the next 3 to 9 months, you are going to see a major player or multiple major players enter the custody business. In the moment that happens, in the moment they can custody, then you're going to see the whole coin market take off again. Right? The coin market's been soft as heck recently, but what hasn't been soft is attendance at these conferences, both the developer conferences, the DevCons, and the non-developer conferences, booming. There's a graph of people coming into our space. It literally just goes straight up. Bitcoin went from 19,000 to 7,000, and it didn't care. If you look at the private markets, right? I mean, Definity and Telegram raising huge amounts of money. The private markets are far, far stronger than the public markets right now. Part of that's because one big institutional investor class missed out on Chapter 1, right? The venture capital community in the US, Sand Hill Road, Silicon Valley, broadly missed out. Mark Andreessen didn't, Fred Wilson didn't, a few other people had done small investments, but broadly they didn't, and they're not going to miss Chapter 2. And so any good project is getting funding, and lots of it. And so it's easy to say, oh, the market feels soft. Underlying, I absolutely don't think it's soft.
Got it. So I'm not sure whether we should quote you on the, it's like commodities back in the day. It's going to go straight up or not. But clearly there's
knock on glass.
there's a big change afoot with fixing questions like custody, and I think the other thing to bear in mind is speculative bubbles aside. It's going to take time for some of these core projects to come to fruition, whether it's around genetic data. And one of the board members of 23andMe is here today, Esther Dyson, so you could maybe have a chat with her. And it's hard to force the pace on those things. And so after the speculative bubbles will come and go, but on a kind of more sort of secular basis, we're going to see the value start to be delivered, and that's also going to drive the the interest in the space. Before we break, because we kind of have to, unfortunately, any other comments on valuation? you could get maybe liquidity premiums on, the tokenization of existing assets, but what about utility tokens and how they should be valued?
So, two things I'd say. If you look at the entire market cap rate, it's less than 2/3 of Apple. And if I look at the amount of energy and talent in the space, from Vitalik up here and all the other coders, and I think, yeah, I'd bet on that giant amorphous team before I'd bet on Apple. And Apple's a pretty great company. Like, it's just, just in my gut instinct, the valuation of the overall space is way too low. Now, to be fair, that's why I originally started investing, years ago when it was much lower. I thought the same thing. That hasn't changed because we keep driving in more talent. I do think you're going to see a shift. So how did we invest in these tokens in the last couple of years? Hey, it's a good team. They've got good investors, and it's a good idea. Buy the token. It goes up. Sell half. Sell the rest. Nice trade. Why? Because for a asset to continue to get interest from people, the story needs to change. Well, if we invested in Funfair and we told the story, and then it was 18 months before he actually can, drop his app on a blockchain, and really 3 years before it can run fast, people lose interest. And so you have this pattern of ICOs go up and go down. We're going to get closer. And it's interesting, like, the EOS blockchain will be really fast. The critics say it's not decentralized enough, there are only 21 nodes, but it would be really fast really soon. And so you're going to see some projects start building on EOS, and we'll see how the market takes that. Does the market say, hey, that's decentralized enough? And so we're going to see this play out, this balance between speed and speed and convenience on the one hand, and safety, security, decentralization on the other hand. There are lots of different blockchain ideas. The market will play that out. And I think valuation, going forward, you're going to have a much better understanding of token economics. No one that paid attention to the token economics, quite frankly, it's the coolest part of the whole space. Satoshi's going to get his Nobel Prize not for the computer science, but for token economics. And if you look, I asked my young guys, okay, tell me how the Ether token works. And 1 out of 4 can get it. It's complicated. It's gas. Well, what's the difference between EOS token and Ether token? There's a difference. The way they're not all using the same model. And so we're spending a lot of time. Actually, my 11 summer interns have one project to go through every token and literally understand how the damn token works. Because no one in our community really did that. You didn't have to. And I'm pretty certain 2019, 2020, you better understand how the token works.
Thank you, Mike. It's been a great chat. So I'm going to have to break it there. I think there's a number of great messages, possibly even speculative tips short term. Also, long term, you're all participants in this movement right now. And then another very tactical one, which is go and, get smart around token engineering, which we also mentioned earlier this morning, and that's a great step in a career path, I think, and I firmly agree with that. So Mike's going to be going now to the Meet the Speaker section with Callum, so if there are people who want to join for a sort of further Q&A, then please go there. But good luck with Funfair, good luck with Galaxy, and thank you very much for coming today.